two of the highest signal on-chain metrics are skyrocketing on Solana right now. In this video, I'll talk about what they are, how to interpret them, and what this means for the future of DeFi. I'll also talk about some risks associated with Solana that could impact its future price in a negative way. Before I get into the video, remember that nothing I say is financial advice, and this video is solely intended to be educational and to help you do your own research. Now let's get into it. Let's talk about some metrics. The metrics I'm going to focus on in this video are two that you may not be familiar with, because usually when people talk about metrics, they talk about total value locked, aka deposits in DeFi protocols, or they talk about number of transactions or active addresses. And all of these metrics have some fundamental problems because they can be faked in various different ways. The metrics I'm going to talk about in today's video are much more difficult to fake, which is why I consider them to be high signal. And those two metrics are stablecoin supply, so the stablecoin supply on a chain. And the reason this is difficult to fake is that the vast majority of stablecoins are backed by either dollars or dollar equivalents like short-term treasuries. And so if the stablecoin supply is going up, that means that people are moving more real money into a chain. It basically removes some of the circular financial engineering that can go on with DeFi protocols, where you have every token in the ecosystem inflating, and that increases TVL. This is hard money. And also this is especially significant because historically this has been the metric where Solana was the weakest. The second metric is app revenue, and this one you may not be familiar with because it was very difficult to track until recently. There was almost nowhere that was tracking it. In fact, as far as I know, up until a few weeks ago, my personal website was the only place that was actually tracking it. And basically what it is it's the sum of the revenue that every crypto protocol on a chain is making. And so you could think of it almost like the measure of economic activity on that chain. And the reason why this is so powerful is and difficult to fake is that it's actual users spending money that's then accruing to protocols, token holders, etc. But they're actually spending money, right? So if you're wash trading with no fees or low fees, that's not going to have much of an impact on revenue, because revenue is only the fee that's actually being taken out and going to the protocol. And so let's talk about what's going on with these metrics. First, we have stablecoins, and this one has historically, like I mentioned, been Solana's weakest point. As recently as 1 month ago, in late December, Solana had fewer stablecoins than Binance Smart Chain, fewer stablecoins than Arbitrum. And Arbitrum has a lot of DeFi projects, a lot of great builders on it, but hasn't really been hot as a chain for a while. So I consider it to be a major weak point that Solana hadn't even been able to accumulate more stablecoins than Arbitrum. It basically meant that most of the TVL in Solana's ecosystem was SOL tokens or other Solana-based tokens, which has value of its own, but that can deflate just as quickly as it inflates. That has started to change rapidly. In fact, in the past month, the total stablecoin supply on Solana has doubled. And if we look at it over the past week, it has basically increased by 51% in the past 7 days. And if you go back a little further, it's increased from around $6 billion on January 15th to over $11 billion today. There have even been some days where it added over $1 billion of stablecoin supply. And this has started to level out over the past day or two, but is still increasing at a relatively fast rate compared to how it was increasing previously. And I think what's even more significant is that over the past week or two, it's actually been increasing faster than the Ethereum supply. For example, you go back to January 15th, and you can see that Ethereum was at 114.6 billion, so it's increased by under $2 billion in that time, whereas Solana, if you go back, was at 6 billion, has increased by $5 billion in that time. So it's not only increasing in terms of percent, but it's increasing in terms of absolute amount faster than Ethereum at the moment. By the way, all these dashboards, stablecoins, app revenue, all available on DeFi Llama, which I am happy to be the head of growth for as of recently. I've been using their dashboards in my videos for years, and so happy to play a role on the team as of about a month ago. But let's talk about app revenue now as well, because this one's new. Literally, some of these features I'm showing you were only added within the past couple days. And so app revenue, again, is the sum of revenue for all applications on the chain. So if it's going up, it means more people are spending money to use applications on Solana. And it doesn't include revenue to the chain itself. You could measure that with the actual revenue figure here. But this is just ecosystem revenue, essentially. This one is, I would say, really on the cutting edge. The past few weeks, everyone has been talking about it. They've been calling it chain GDP, blockchain GDP, etc. I'm going to go out on a limb and say that I take some credit for this, because earlier in 2024, last year, I wrote this article introducing chain GDP. July 15th, my tweet about it had tens and tens of thousands of views. This article alone had around 10,000 views. So I think that's fair to say that that had some impact, not to mention the fact that I can't really find any reference to the term chain GDP on Twitter before this, at least not in this context. And then now a lot of people are talking about it. So I take a little bit of credit for elevating this metric. But that's not what we're here to talk about, right? We're not here to talk about that. What we're here to talk about is app revenue, which is one interpretation of this chain GDP concept. Basically, it's a measurement of economic activity on the chain. So metric like TVL measures dollars, metric like active addresses or transactions measures activity. App revenue measures both dollars and activity, and it does it in a way that is difficult to fake. And so if you look at this measurement, then Solana's app revenue has been increasing rapidly as well. Over the past week, it was around $150 million, and this week is not over yet, but almost over, so we'll say $150 million. 2 weeks ago, $75 million, so 2x. 4 weeks ago, $53 million, almost a 3x, and in fairness, that week was a low point. But go back a couple months, go back to October, we're looking at a 3, 4, 5x, depending on the week, maybe even more, 6, 7x. Basically, this has just increased rapidly, and it's grown to a point now where if you look at the total across all chains, 24-hour app revenue, Solana is bringing in, or Solana applications rather, are bringing in tens of millions of dollars more than the next closest competitor, which is Ethereum, which is just under $8 million. Number 3 place is Base with 1.46 million, Hyperliquid with 1.13 million. Then it drops off dramatically to other chains like Binance Smart Chain, Avalanche, Arbitrum that are in the hundreds of thousands, and then really just falls off rapidly from there. You can see that there's not many chains where people are spending significant amounts of money in revenue that goes to applications. And so what does this tell us? Well, first I would say this is the best measurement of economic activity that we have in crypto. It's better than volume. Volume was valuable for a time as a measurement of on-chain activity, but at this point it really becomes tough to use because A, certain platforms definitely have wash trading. B, you have different volume that has different quality levels, but the value that's actually being captured from that tells you what people are willing to pay, and I think that's pretty valuable. And so what it tells us is that the actual size of the active economy in Solana is at the moment larger than other chains, and you can argue about whether that will last. It has lasted for a while now, but at the moment it's larger. If we look at Ethereum, let's look at Ethereum for comparison. Ethereum is also growing. So if you look at the weekly app revenue on Ethereum, you can see that it has consistently grown since fall of 2023. There they were averaging $4 to $5 million a week in app revenue. Now they're more like $20 million. So it's nothing to laugh at. But if you were to line these up side by side, you would see that at some point in mid 2024, Solana flipped Ethereum, and people weren't tracking this metric at the time, so it happened to little fanfare. But if we were to go back in time and pinpoint it, I suspect we would find that it was sometime around here. So for example, June, Ethereum apps brought in $66 million. Solana apps brought in 87 million. So it was around there in the late spring, early summer that Solana flipped Ethereum. And since reaching parity, it's now grown to a point where it is significantly larger than Ethereum. In January, Solana has brought in $418 million in app revenue, and Ethereum is sitting at around $70 million in app revenue. Something else that's important to consider when looking at app revenue is that if you overlay SOL price over time, then what you'll find is that peaks in app revenue, or local peaks, oftentimes did coincide with local tops in price. Here, if you look at this peak, this blow off top in March, it coincided pretty much perfectly with that local top in price. If you look in November, you'll see that it was only off by a day or two. And then if you look at this peak here with the Trump meme coin launch, you would see that it coincided to the day with this local top in price. And it's tough to imagine app revenue surpassing this peak from when Trump launched his meme coin without at least some consolidation first, right? I mean, long term, if you believe in the blockchain, you would think that it's going to surpass it, but it's unlikely to do it right away. And so it wouldn't shock me if this was the peak for a bit. However, if we can see sustained elevated app revenue and form a new base here, then it bodes very well for Solana and its ecosystem over the mid to long term. But before you go and start putting in longs on Solana, there are some reasons to think that its price might not outperform in the short term. Reason being that there are some major unlocks coming, because people who bought SOL as part of the FTX estate are going to have it unlocked soon and will be able to start selling. So let's talk about the magnitude of those locks, because you can't talk about Solana in fairness without mentioning these. So here is a spreadsheet of the upcoming locks. And unfortunately, basically all the good graphical representations I've been able to find of this exist as screenshots of what look like Excel spreadsheets on Twitter. So if these numbers turn out to be wrong, I apologize. Would love to get the correct numbers, but these basically line up with what I've been able to find. So let's focus on the next few months. We've got February, March, April. We've got 3.2 million SOL tokens unlocking in February. This is SOL tokens, by the way, not dollars, SOL tokens. Then in March, you've got 9.75 million. Then in April, you've got 2.7 million. So add all those up, you've basically got 15.7 million SOL tokens unlocking over the next few months. And as of the time I'm making this, you can see that the price of SOL is 249.85. We'll round it up to 250 for the sake of calculation. You take 15.7 million tokens, multiply that by 250. You basically have just under $4 billion worth of SOL unlocking over the next few months. So the question is this a reason to be concerned? Is the price of SOL going to dump? First thing I'm going to say is I don't have a crystal ball, right? You should still form your own opinion. My impression on this, if you look at the ratio of SOL to ETH prior to the launch of the Trump token, SOL had actually been bleeding against ETH since November. And even now, after you had the launch of the Trump token, you had millions of people, as far as I can tell, it seems like millions, use Solana for the first time via apps like Moonshot. Most of them didn't do anything besides buy the Trump token, but that's a different concern. They used it for the first time. You have app revenue, stablecoins going up, and the SOL to ETH ratio is right where it was in November, right where it was in November, barely above where it was in October. So I think the fact that you have these unlocks coming, I think that's basically the reason why SOL has actually not performed better. It did hit an all-time high, both in USD and ETH terms recently, but it hasn't really gone on the sort of insane run that you might expect with these kinds of metrics. And I think that is because these unlocks are a known commodity and have actively been priced in over the past few months. I would still expect volatility, and I wouldn't necessarily expect the underperformance to stop until the unlocks were behind us. However, it wouldn't surprise me if once the unlocks happen, we actually saw SOL to start to pick up afterwards. Reason being that not all this is going to be dumped at once, and much of it was sold to ecosystem players or players who are sophisticated enough to be smart with their sells. By the way, if you want more analysis of on-chain metrics like this, be sure to check out my newsletter, newsletter.dynamodefi.com. At least once a week, I send something out with not just analysis, but top readings, token unlocks, news to keep you informed, and more. And if you want to see more videos like this, be sure to let YouTube know by liking and subscribing. Until next time, this is Dynamo DeFi.